This is Bloomberg Surveillance Early Edition with Dani Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. China's economy lost momentum in the second quarter, missing estimates and ringing new alarm bells about its recovery. U.S. Treasury Secretary Janet Yellen says she's eager to build on recent improvements in U.S. China relations as finance chiefs from around the world gather in India. Yellen speaks exclusively with Bloomberg at 8:15 a.m. New York time. And the end of an era? The dollar's recent drop has a bevy of strategists and investors saying a turning point is finally at hand for the world's reserve currency. Good morning and welcome to Bloomberg Surveillance. This is the early edition. I'm Dani Berger in London. Kriti Gupta is in New York. Kriti, we survived the China data dump in the wee hours of this morning. Now we just get a little bit of a break before a whole lot of earnings our way.
Yeah, we absolutely do. And I think it's really affecting perhaps the way that futures are trading stateside, even though I would say they're not major conviction either direction. But you are seeing some interesting action in futures right now, Dani. I like to look at NASDAQ 100 futures because, ironically, that's where you're seeing the most action. It's only higher by 0.1%. If you look at S&P futures or even Russell futures, you would start to see that they are essentially flat or down by a very, very tiny margin, which tells you that perhaps the tech story is already getting a little bit of a lead start coming out of the China trading session. Of course, the European trading session as well. What's interesting to me, though, is the bond market, because, again, a continuation of last week's narrative when it comes to bond market volatility, that two-year yield at 4.72, retreating even further, 4 basis points lower. Now, a few folks in the market, I wouldn't call it consensus yet, but a few folks in the market saying that perhaps those rate cuts that are priced in may actually materialize, maybe not this year, but as early as March of 2024. And that is a big deal for Wall Street to kind of get on board with what the market is pricing in. Of course, as we look at the dollar, the bond move, we have to look at the dollar as well. Dollar yuan really in focus today, coming off of that China data, as you point out, Dani. We're going to get into the details in a moment, but big picture, what you need to know is dollar strength against the offshore yuan. 7.17 on that currency pair, stronger by about 0.2%. But again, sticking with the China story, if the question is about growth and whether or not China is going to be exporting deflation, commodities are a great gauge of that. Copper, we're going to use as our kind of bellwether. They're down almost 3% on the session, which really tells you that you're seeing some pain in the commodity space off the China story.
Well, the dollar might be stronger this morning against the yuan, but it still is a stronger euro story. That's the word so far here in the European trade. We're stronger by about 0.1%, the euro versus the dollar. Good news for perhaps tourists who are going overseas, which has really helped support, bad news rather, for tourists going overseas, which has helped support the European economy to some degree. And we're starting to see signs of what it means for the American consumer to not participate in European companies. I really want to highlight this morning what's dragging Europe down. It's the China data, and it is also Richemont earnings. Richemont falling some 8.5% after having earnings this morning. They released them, and it was about in line with what analysts expected. But the really sour point was America revenue. It was expected to gain some 5%. It actually dropped 2%. The rest of the world was okay. Europe was good. You had, again, consumers traveling from China and from the U.S. to Europe to buy Richemont goods. Even Asia sales were okay. But that combined with the ugly China data means it's a really bad session for luxury. You can see LVMH also dropping nearly 4%. So, Kriti, you got to get out there. You got to buy some Van Cleef. You got to buy some Cartier. They're clearly in need of it.
Yeah, I'm sure my piggy bank is really going to help them out when I start to invest. But again, you pointed out it's really all about the exposure that they're getting in the U.S., but also in China as well. And that's kind of where I want to go. Over in Asia, China's economy expanded more slowly than expected in the second quarter. GDP grew 6.3% from a year prior against the 7.1% forecast. Joining us now, Bloomberg China economy and government editor Jill Desis. Jill, the call for stimulus, how big is it growing given in the backdrop of the likes of Morgan Stanley, Citigroup this morning actually cutting their forecasts on that Chinese growth?
Yes, exactly. Well, I think that, so first of all, while there might be some investor calls for more stimulus, I don't really think that the Chinese government or a lot of economists that are watching this economy see it that way. Ultimately, it does seem like stimulus of any sort is going to be limited. It's going to be targeted. That's the message that we've been getting from this economy for quite some time now. We just saw from the central bank last week that it's likely that, even if there's more additions for the property market, for example, that would probably be pretty targeted and limited in scale. And that was just before we just saw this data earlier today that showed property investment contracted in the first 6 months of the year by even more than what economists were expecting. It's a really difficult, I guess, kind of way to see this when you're thinking, oh, well, maybe, you'd want more stimulus to try to help the economy. What the government's looking at is, are they taking on more debt risks by doing so? Is there really a lot that monetary policy can do to move the needle, especially when the Fed is expected to hike later this month and you still have some of that aggressive hiking going on elsewhere in the world? Ultimately, yes, it's a very challenging picture for the economy, but it all kind of boils down to still this idea with some of these downgrades that you're seeing from economists of, well, as long as they're still within this target that they've set earlier this year of about 5% growth, which at this point it does seem like China is, maybe there's still not that need for anything that seems more aggressive than just those targeted policies that are hopefully going to help, boost confidence. But at this point, confidence is still pretty low, so we'll have to see how that goes.
Yeah, Morgan Stanley and Citigroup cutting their 2023 GDP to 5%. So as you say, still within that target. Jill, thank you so much. That's Bloomberg's Jill Desis. Now, Treasury Secretary Janet Yellen says the U.S. should look for ways to further de-escalate tensions with China, but added it would be premature to eliminate the tariffs imposed on it by the Trump administration. Yellen was speaking to reporters ahead of the G20 gathering in India this week.
Perhaps over time, this is an area where we could make progress, but I would say it's premature to use this as an area for de-escalation, at least at this time.
Joining us on the ground at the G20 summit is Bloomberg's Menka Doshi. Menka, what's coming out of the meetings today?
Well, I'd like to point out to you, Dani, that this is Janet Yellen's third visit to India. And amongst the many comments that she made, one of which you played, she also emphasized the need for multilateral development banks across the world to shore up their financing capacity. And that is one critical talking point here at G20 through the course of the year. And in this meeting as well, we have the World Bank President Ajay Banga here, along with the heads of many other MDBs. And the question is, are they going to be able to step up their financing capacity? And are they going to be able to crowd in private sector financing? The second big issue here is relief to debt-burdened, low-income countries, and whether those on the edge of default or who have defaulted already are likely to benefit from the kind of resolution that Zambia has seen, the details of which we don't have fully, but we do know that it took a long negotiation to get China onto that agreement table. So these are the two core issues that are being discussed here at the G20 in Gandhinagar in Gujarat in India, amongst the many other issues, including concern about the economic recovery in China and what's going on with interest rates across the world.
Yeah, a lot to digest and a clear read-through coming out of Asia. Bloomberg's Menka Doshi coming up, joining us from New Delhi. We thank you as always. Coming up later from the G20, we'll of course be speaking to the U.S. Treasury Secretary Janet Yellen. You can catch that exclusive interview right here on Bloomberg Television at 8:15 a.m. New York time. Now we are getting some breaking news. Russia saying that the Ukraine grain deal has expired today. That coming from TASS. What's important to keep in mind is that you are having a real read through into the commodity space. You are starting to see wheat futures and soybean futures spike on the news. We know that Vladimir Putin on Saturday said that the demands over the deal hadn't been met. It was a deal that was brokered by Turkish President Erdogan and really allowed some of the grain to exit Ukraine and really get shielded from some of the attacks on the ports there. Certainly something we're going to be monitoring. In the meantime, you have U.S. and China relations under pressure as well. China, on the other hand, intensifying military drills with Russia. That comes as Russia blames Ukraine for damages to its flagship bridge to Crimea, killing 2 people and causing the suspension of road and rail traffic. Joining us for more is Ross Matheson, Bloomberg's news director for Europe, Middle East, and Asia. Ross, walk us through all of these developments in Russia. How big of a deal is this when it comes to both the bridge and the grain deal?
Well, it's interesting because this grain deal has largely been dead anyway for some weeks. There's been very little movement of Ukrainian grain out through past Turkey into the rest of the world anyway. So it's been really troubled for some time. But now we have Russia officially saying they're refusing to extend this deal further past the deadline of today, although they say under some circumstance in the future they might come back to it. It comes, of course, as we've seen another explosion today on that key bridge, which links Crimea, which is occupied by Russia, with Russia itself. And that's a really important bridge for Russian President Vladimir Putin. Crimea really is a red line for him. And whether he needed a pretext to nix this deal is a question, really. But he's saying that Ukraine, of course, carried out some sort of attack on the bridge today, a drone attack. So an effort there by Russia to at least link those events. What we do know, of course, is that the grain deal, as I said, has been on a slow ball for some weeks already. The question is, at what point in the future would Russia be willing to come back to it?
Roz, could you also put into context the news we learned over the weekend about Russia temporarily, at least they say, seizing the Russian subsidiaries of Danone and Carlsberg? Is this something Russia has done before, and what does it mean for these corporations?
Well, that's right. They have done it twice before with two other companies, but it's the first move in a while. And of course, Russia says this is a temporary move, but it's hard to see, having seized these assets, they'd be willing to give them back. And it really reflects the difficulties that many of these Western companies find themselves in. Some have managed to pull out of Russia entirely. Some have found it very difficult to do so, to divest their assets or to reduce their footprint there. And really sort of now we're seeing the difficulties that are coming as a result of that. But equally at the same time, investors in these companies have probably largely written down those assets since the war began, since Russia invaded Ukraine in February last year, and it's sort of priced in some risk there as a result. So you're not going to see significant moves in the shares, for example, today. But again, it just shows that balancing act for those companies. Do they stay entirely in Russia? Can they reduce their footprint there? If so, how? How can they divest their assets in a way that is acceptable to their shareholders? So really just highlighting again the complexity, and probably a warning to some other Western companies still operating there, Nestle, Coca-Cola, and so on, that they might be next to be targeted.
Yeah, and I'm also just checking out oil's price. That also spiked on that wheat headline, too. Just really shows how supply chains are still under pressure from the ongoing war. Rosalind, thank you so much. Rosalind Matheson, Bloomberg News Director for EMEA. So that's the story in Russia. Let's talk tech now. And Microsoft will keep Call of Duty on Sony's PlayStation to ease antitrust concerns about its $69 billion acquisition of Activision. For the latest on the saga, we're joined by Bloomberg Quick Takes Alex Webb. Alex, they seem just so close at this point. What are the final hurdles that remain?
They really need a green light from the UK. It seems they've cleared everything in the US. There was a final effort from the FTC at the Court of Appeals to sort of put a stay on the deal, stop them from closing it. They failed on that front. They're now trying to get it through the UK. There is a hearing today, Bloomberg is reporting. The target is for it to close tomorrow. So the UK is really up against it. The UK regulator, the CMA, if it wants to stop that deal, they have sort of issued a kind of stay of execution in a sense by giving them scope maybe to make some more concessions. It seems as though the concessions are going to be the way that Call of Duty in particular is sold for online gaming in the UK, for cloud gaming. That's been the bone of contention here in the UK, slightly different from the US, where they were looking more broadly at the role that it played in the gaming space. But, you know, as in football, they would say when you get close to the final whistle, it's squeaky bum time.
They need to defeat the final boss, Alex.
Exactly.
Alex, what's interesting to me, though, is that they did broker that deal ultimately with Sony. For the U.S. perspective, a lot of the FTC testimony really was kind of based on what Sony was claiming in terms of kind of exclusivity in the console market. Alex, talk to us about the U.K. regulatory process here. We know we have that hearing coming up today, but the timeline for the CMA has extended to August 29th. What happens between now and then?
Well, yeah, so what we saw happen in the US was that, firstly, the process is a little bit different because it's almost as the FTC operates as an equal-footed entity. It kind of can sue to block the deal. It doesn't actually have the power just to unilaterally stop a deal. That is not the case in the UK. They stop a deal and then the companies involved will appeal it. That is what is happening now. In the US, they focused on control of the gaming market as a whole, role in the gaming market as a whole. Microsoft and Activision made the case that actually the deal wouldn't make much sense if they weren't selling, in particular, Call of Duty. That's their big blockbuster, so-called AAA game on the PlayStation. The economics just don't add up. In the UK, it's really about cloud gaming. Now, it looks as though they might find some sort of agreement which will let the deal still complete tomorrow. Worst case scenario is that the whole process has to start again. It's unclear then how that would all pan out, given that the deal might well close. One caveat to all this, Facebook's acquisition of Giphy, the GIF, Meta's acquisition of Giphy, the GIF website or app, that closed, and then the UK blocked it after the fact. Facebook did end up selling Giphy. So there is a path. Microsoft Activision, though, a lot bigger deal, a lot more complicated.
Alex, thank you very much. That is Bloomberg Quick Takes Alex Webb. Now, coming up on the show, the U.S. dollar snaps a 5-day losing streak after its worst run since November. We'll have more on that trend next. And Fed speak goes dark ahead of the rate decision next week. We're going to be catching up with Simon French, chief economist at Panmure Gordon, later this hour. Plus, U.S. bank earnings in full swing. We'll get a deeper look with Bloomberg Intelligence in our roundtable. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Dani Berger in London. Look, the trade today seems to be all about the economic data we got out of China. The idea that growth may be slowing down way faster than expected, something that now Citi and Morgan Stanley are saying is going to have a real read-through into their GDP. For our radio audience, stick with me. For our TV audience, we are looking at their median 2023 growth estimates, of course, coming from those private economists. You are now seeing it being cut to 5% for 2023 from the previous of 5.5%. That is a massive deal when you look at the FX trade and the bond trade just as early as 5 a.m. this morning. I want to kind of see how that translates into the bid for the dollar. Joining us now, a true expert on the FX space, Bloomberg Markets Live currency and rate strategist Ven Ram joins us. Ven, when we talk about China potentially exporting deflation to the rest of the world, how does that have a read-through into, say, that dollar weakness?
Morning, Kriti. Obviously, China's exports haven't gained traction at all this year. And what we saw from the data this morning is that, look, I mean, they need to be doing a lot more stimulus to revive the economy because, you know, what we have seen is that property sector is in doldrums, and that's 1/3 of the economy. And so they have to, if they're going to get the 5% growth that you just mentioned, they need to revive exports, which accounts for 1/5 of their economy. And if they do that, that's not going to have massive implications on the dollar, I'm afraid, because, you know, China, as you said, is exporting deflation into these economies, but we are in the late economic cycle at this point. So I don't know if this idiosyncrasy is going to pass over to the other economies at a time when pretty much the rest of the world seems to be doing okay.
In terms of, and then quickly here, of the trend of a weaker dollar, I mean, China to some degree wants a weaker yuan, right, for helping stimulate their growth?
Absolutely. I mean, if you look at the yuan this year, it hasn't budged much at all. We have seen like some 3% move in the dollar yuan rate. And if you look at the China fixing, the PBOC's own fixing is just down some 2.7% or something like that. So if they're going to rely on exports, which it is very clear that they need to do going forward to get that 5% growth, it means that exports have to be revived. Exports are in the doldrums as well. And if they're going to revive exports, they are going to have to weaken the yuan materially from here, which means that the yuan has to go to, say, 730 by the end of the year.
Ven, thank you very much for that. That's Ven Ram from our Bloomberg MLive team. And for more market analysis from Ven and the rest of the team, MLive Go is where you want to head on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Dani Berger in London. Kriti Gupta is in New York. Now on to some top stories that caught our eyes this morning. And before you think you've changed the channel to one of our general news peers, let me tell you, we are going to discuss weather and sports. Starting with the weather, Kriti, several thunderstorms hit the U.S. Northeast over the weekend, causing deadly floods and suspension of several airport operations. Then meanwhile, over in Europe, a sizzling heat wave is threatening to make the summer one of the hottest ever. Southern ports of the continent are expecting to see temperatures soar past 40 degrees Celsius, or if you're in the U.S., that's 104 degrees Fahrenheit. Of course, it is still cold and rainy in London, in case you were wondering. Now, still here in London, not having to deal with those temperatures, it was Wimbledon, the final. It celebrated Carlos Alcaraz's win at the tournament, defeating seven-time champion Novak Djokovic. The 20-year-old Spanish player is the second youngest to win Wimbledon during the Open era. And Kriti, how about this? For a 20-year-old, he has won $2.9 million by winning this thing. Though that being said, that was probably the cost of a pint of beer at Wimbledon, given inflation. But still, that's a lot of money if you're 20.
It is. I think it's a lot of money at any age, to be fairly honest. I think what's hugely important, though, is that final play was just incredible. He was down in that first set, so to come back and recover after Djokovic winning the following two sets is a really big deal. Dani, I have a fun fact for you, though. Carlos Alcaraz is the first in about 21 years since 2002 to win outside of Djokovic, Federer, Nadal, and Andy Murray. So really setting the tone for a new generation in tennis.
I'm not going to lie, and I don't know what's wrong with me. I actually cried when he won that game set
Totally
point.
natural.
I literally cried. Just also want to mention quickly, Lionel Messi. He is officially a Florida resident after finalizing his deal with Inter Miami. Kriti, I showed you the picture. He was seen shopping at a Publix in Florida. I love it. He's a man of the people.
Totally. His contract set to run through the 2025 Major League Soccer season. And by the way, some folks expecting him and the kind of buzz around those games to fuel some of the inflation in that region, something we're going to be watching for, of course, on a market and eco level.
Yeah, ticket prices that rival a Taylor Swift concert. In other words, very expensive. All right, coming up, we're going to be speaking to Simon French, chief economist at Panmure Gordon. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China's economy lost momentum in the second quarter, missing estimates and ringing new alarm bells about this recovery. U.S. Treasury Secretary Janet Yellen says she's eager to build on recent improvements in U.S.-China relations as finance chiefs from around the world gather in India. Yellen speaks exclusively with Bloomberg at 8:15 a.m. New York time. And is it the end of an era? The dollar's recent drop has a bevy of strategists and investors saying a turning point is finally at hand for the world's reserve currency. I'm Kriti Gupta in New York with Dani Burger in London. Dani, a lot to digest on the geopolitics. We have Chinese data, we have the Russia story, and of course what that has in terms of a read-through for FX. But I got to say, it's not that clear of a picture when it comes to today's trade.
It's not necessarily, and I think it's because, as you lay out, there's a lot of cross currents. We also don't have any Fed speak in terms of U.S. data. It's not that remarkable of a week. We get U.S. empire manufacturing today. That's kind of it. So there's nothing to necessarily guide or reframe investor expectations, again, especially without Fed speak. The euro is continuing its strength. It is trading at a February 2022 high at this moment, despite the fact the dollar may be struggling, the dollar gaining against some other currencies. Again, it's that continuation of the trade last week. Are we going to get it, or is it too far? Now, I have the markets blog, live blog in front of me, which of course is a great place to read some of these resources. So with that, Kriti, and with the European trade into the red, I'm going to hand it over to you.
Yeah, certainly something we're going to keep an eye on when it comes to the read-through of the FX space on stateside, especially on the dollar. But first, I want to get to a few other assets. NASDAQ futures outperforming here, but only by 0.1%. I think those cross currents, Dani, that you were speaking of, really fueling the idea that we don't actually have any real direction. Remember, the Friday bank earnings story kind of gave us a little bit of a lead that perhaps things are going okay in the U.S. But of course, we are still waiting on those bank earnings tomorrow as well, which could change the game. We're going to dive into that later in the show. The bond market gets interesting as well, because now you are starting to see a few analysts and strategists on Wall Street come out and say, well, maybe those cuts that are priced into the market, they might just pan out as early as March of 2024, which, Dani, if you think about it, is not that far. The two-year yield retreating again, 472, down about 4 basis points. Now, you would think when when yields come down, the dollar would be weaker as well. And I think against the euro, it is. But then you look against the offshore yuan and you're seeing dollar strength. Net, the Bloomberg Dollar Index is actually higher. Again, these cross currents coming from China versus strength in the U.S. versus interest rate differentials in Europe, not giving us a clear picture. But I have to reinforce the China story here because you're having a very clear read through into the commodity sector. Copper, for example, down almost 3% on the day, really shows you the sensitivity to the growth issues there.
Let's dig more into the China story, Kriti, because its economy slowed more than expected in the second quarter. GDP grew at 6.3% year over year. The expectation was for 7.1%. Joining us now is Simon French, chief economist at Panmure Gordon. Simon, I guess it's hard to disappoint a market that never had any hope to begin with for China growth, but does this change anything for you?
Well, it's a difficult week, isn't it, for narratives, and therefore, to some extent, it's an outweighed data print because we haven't, as you say, got other major economy data points, central banks speak. But in terms of the narrative specifically around China, there was a bit of a sliding scale of the data against, the first thing that has to be said, quite easy comps in Q2 2022. So actually, it was always going to be an above trend year-on-year print, even though it missed to the low side. But if you break down the component parts, decent strength in retail sales, still a bit of revenge spending, maybe not as strong as some had hoped, but 8% plus for retail spending suggested a decent amount of strength there. But it's further down the line items where you starting to get into fixed capital investment, you start to look at youth unemployment data, where there are some more worrying signals around the overall balance of growth in the Chinese economy. And for an economy that has given, over the course of the last 15 years, 40% of the global economy's growth, and even this year, on lowballed expectations, probably about a third of global economic growth, it's a very relevant data point for how much aggregate output growth the world economy can squeeze out.
A lot of people thought, look, if the China data is coming out this way, surely we're going to get large-scale stimulus. We haven't gotten it. I still see plenty of expectations that maybe at the end of this month, when we have the Politburo meeting, there we'll get it. Are you expecting large-scale stimulus coming out of China?
Not large-scale, because there is a delicate balance to strike here. Too much stimulus, and you start to have an over-weakening of the yuan, fears of capital flight, and also making the job of rebalancing the contribution that real estate has into the Chinese economy, about a third of overall economic activity. That is a stated aim of the administration, to try and reduce that and rebalance growth towards technology, towards new energy. I'm afraid overly stimulating a sector that is, all right, it's in the doldrums, but if you go back and play the old tunes, unfortunately those structural arrangements which you've got to put in place given the prevailing demographics and skill shortages in the Chinese economy, you're going to make that job more difficult. There's a delicate tug of war going on, and therefore, to your point on aggressive stimulus, doesn't lend itself to an aggressive policy response.
Simon, you use that key word, structural changes, and I think it's interesting that you talk about it in a Chinese context, but let's bring it to an American context here. One of the main stories we've been following over the last few weeks is structural changes in the American economy that are now leading to things like union negotiations and labor strikes across this country in an era where it feels like the consensus is that inflation is heading lower and in the right direction. Talk to us about the stickiness of wages. How much is that priced into these economic models?
Well, the first thing to say is, although we are seeing a spike on recent trends in terms of industrial disputes, both in the US and in Europe, you have to look at unionized membership. There's a lot of talk about, particularly from the Biden administration, about good unionized jobs, but union membership in the US is about 9%. Back in the late 1970s, it was north of 30%. So that reversal towards collective pay bargaining, pushing in a different inflation spread from labour over and above the price mechanism, I don't think is in anybody's central economic model, because they don't see, and I certainly don't see, that bargaining position transforming itself back to an environment we saw in the labour market models of the 1970s and early 1980s.
It's interesting that you talk about the 70s and 80s, because it feels like we're almost having a repeat of the 90s negotiations, a lot of those parallels being made. Simon, talk to us then about how these strikes and labor negotiations could potentially very quickly, from Detroit to Silicon Valley to Hollywood, translate into a much higher unemployment figure. Is that the metric of success when it comes to the Federal Reserve doing its job?
Well, I think you make a good point in terms of you've got to factor in the degree to which industrial dispute pushes down corporate earnings, actually does some of the job for the Federal Reserve in terms of deflating the momentum in the US economy, and the degree to which, I mean, the Federal Reserve, you'll never hear a Fed speaker cite that as either a target or indeed a contextual factor. Central bankers are pretty good at claiming responsibility for bringing down inflation as part of their own toolkit. They see that as an exogenous factor. There won't be too many people who are disappointed amongst the federal banks across the United States if that manages to squeeze out a little bit extra of that excess demand that has been the real Achilles heel to the Fed hitting their policy targets.
Simon, I'm going to be honest. All I really want to know is what 12 pounds a glass of Pimm's at Wimbledon is going to do to UK inflation.
Yep.
The prices were crazy. They were absolutely crazy there. I'm sure you watched. I'm sure you paid up for it. No, maybe
I did.
Not.
Well, I wasn't at Wimbledon, but I've done other sort of events in the UK summer season where take the cricket at Lord's, similar sort of price points. Look, they're inflated price always at these events. The one thing I'd say, this week we get a key inflation print out of the UK for June. 8.7 was the May print. We expect 8.2, perhaps even 8.1. That's still 350 basis point spread higher than the G20 average. Right. The UK remains, and you can see this in gilt markets, you can see this in equity markets, the UK remains an inflation outlier. We're going to be another month, I'm afraid, until we start to get a real downshift in UK inflation. But yes, to the point of a Pimm's or a pint or any of your drinks of choice, it's a very visible inflation upside that makes the UK an outlier amongst its major economy counterparts at the moment.
But is it also an outlier in terms of the ceiling the BOE faces in terms of hiking rates? We've seen the European economy, the American economy hold up relatively well, but the UK, it's been said much before, it has this mortgage pressure.
Yep.
So is where the BOE can go, is that much less?
Well, a shout out to your Bloomberg colleagues who did some very good analysis about 10 days ago on this. Looking at the short-term impulse from rate increases was actually quite stimulative in terms of passing on an initial spending power to savers before that mortgage refinancing cycle plays through. But that is about to inflect. And I've written quite a lot about the fact that the Bank of England need to be able to say, right, we've done 490 basis points worth of hiking since the start of this cycle. That is not going to play out in large part for another 18 months, 2 years. And therefore, a pause, analogous to the one we've seen in the US, in Canada, in Australia, and the ECB are sort of gearing themselves up for, has to be part of the MPC's thinking. The problem is they're still printing a CPI north of 8%. Very difficult to carve out that rhetoric when you've got a print that looks so different to those other major economies.
Around the world in 8 minutes, Simon French takes us through it all. Simon French at Panmure Gordon, thank you as always. Coming up, we're halfway through big bank earnings in the United States. We're going to get a deeper look from two true experts. Stick with us. This is Bloomberg.
You're seeing the benefit of higher rates, and I think we positioned our balance sheet to get the benefit of this over the last few years, and it's coming through as we expected it would. Now, as you look forward from here, you're certainly going to have more challenges as you look at consumers continuing to spend, which is drawing down some of the deposits. You're seeing rates potentially get to closer to a peak. And so a lot of those factors will drive net interest income over the coming quarter.
The CFO of Wells Fargo speaking there to Bloomberg after the bank earned more net interest income than analysts expected in the second quarter and lifted its guidance for the full year. Bank earnings continuing this week. Morgan Stanley, Bank of America report tomorrow, followed by Goldman on Wednesday, plus a host of regional banks to come throughout the week. For more on this, we're joined by Alison Williams and Herman Chan of Bloomberg Intelligence, two of the brightest and best, I must say. Alison, I want to start with you here when we're talking about simply what we actually learned on Friday. Some pretty decent results coming out of JP Morgan, Citi, and Wells Fargo. Is the bank turmoil that we were worried about 6 months ago, are we in the clear?
I think, in terms of the actual turmoil, we are in the clear. I'll let Herman chime in a little bit more since that really involves some of the regional banks. But I mean, the broader issue in terms of the portfolios and the impact of rising rates is something that we'll deal with for a while. But I think that the bottom line for the big banks, you saw the better net interest income. I think it wasn't a huge surprise. The banks were all sort of running ahead of plan or ahead of guidance, if you will, in the first quarter. I think they were just very conservative and hesitant to up the guidance. And now it was a lot tougher to do. JP Morgan did up their guidance, but they had to up that again. And I think what we're seeing there, two key things. So one is for my banks, the credit card business. That is where you're seeing the loan growth across the industry. So while loans are flattish, commercial and industrial down, card is actually holding up pretty well. It's the higher yielding part of the portfolio. And so that really is helping Citigroup and JP Morgan that really have outsized exposures. Also Wells Fargo that has done a good job growing in that area. And then the second thing is the cost of deposits. So we have seen that obviously coming up. We had the big benefit in 2022 to the yield part of the equation. Now we're seeing the costs going up, but those costs came in, I would say, less than feared. So costs are going up. Deposits are still continuing to migrate to higher yielding alternatives. They are migrating to money markets, but perhaps not to the extent that some had been afraid of.
All right, Herman, your turn. Alison kind of laid the groundwork, basically saying, look, there is a lot of strength in these bigger banks, a lot of it led by the consumer. Talk to us about the regional bank story. I know you have your eye on PNC Financial, which I should add was one of the bidders, if I'm not wrong, for First Republic as well. How are they faring?
That's right. So we are seeing some of the same issues that Alison articulated earlier. The fallout is really recurring for the regional banks, where you're seeing the higher cost of deposits, which is really, for the regionals, upending the revenue equation. We're expecting revenues to come down across the board for the regional banks because of the higher funding costs. And Alison articulated higher credit card lending, whereas the regional banks really don't have that aspect into their loan books as much. So you're going to see some flattish or actually declines in the loan portfolios for the regional banks. We're expecting fairly strong results from PNC relative to the group because they just have a bit more of flexibility from the deposit perspective and also a broader reach from a geographic perspective because they just recently bought BBVA on the West Coast. So they've got a bit more levers to pull versus the typical regional bank.
Herman, are you expecting any more hints of consolidation within regional banks this reporting season?
Yeah, that's the big question. We should be able to see, ideally, some consolidation across the board for the regionals because of just the tougher revenue backdrop, higher regulations, and potential credit issues down the road. So in theory, you should expect to see consolidation across the industry. What's really affecting that notion is that the regulators have all, for the Biden administration in particular, have had a tougher eye on regulation because they're focused more on competition. So if the regulators loosen up a bit, then I think you could see some consolidation down the road.
No, that's a great point. And Alison, we had all of the banks post-stress tests release more investor payouts, but we're still waiting for things like Basel III reform. Is there going to be more headaches when it comes to banks, especially in their ability to return shareholder capital because of what regulators propose?
Certainly, the Basel III endgame rules are the thing that we're waiting for the big banks. The news on the stress test was positive for most banks except for Citi. I should note that Bank of America and Citigroup both do have ongoing dialogues with the Fed, just trying to understand a little bit more transparency behind the results and why they were so different from some of their own internal projections. But Basel III endgame rules, we've already seen sort of some of the outlines of the proposal. We've had many hints in the press, but that really is going to be one of the key factors to decide how much capital flexibility the banks have. And to be clear, when we look at some of the headline numbers and some of the scenarios thrown out there, the banks have the pre-tax profit to certainly meet these higher standards, and there will be a phase-in period, but it will be a constraint.
Alison, talk to us then again about kind of where the banks go from here over the next few quarters, assuming that tomorrow we get a similar broader message that we got from the likes of JP Morgan, Citi, and Wells Fargo. You mentioned a lot of the growth was kind of led and bolstered by the credit card story. In past quarters, a lot of it's been bolstered by trading volume. Where did the trading volume go? Where might it go in the next few quarters?
So in terms of the trading and fee revenue has come in weaker. So it's a little bit better than perhaps the bar was lowered with a lot of the comments in June and the like. But I think it's really sort of a tale of two revenue streams. So trading is coming down, but really within a historically higher range and very profitable. And we do think that on the fixed income side of things, you will still get a lift on the rate side just because of the uncertainty. We're in an unprecedented environment. We think that continues to drive a lot of volatility and activity. Also this year for the banks, and certainly you're seeing it in the quarter, the credit trading side of things, which was very weak last year, just coming off of some weaker comparisons. We're getting some issuance finally, so that's helpful on fixed income trading. Equity trading, weaker, but again, still within a historically high range. And then the other side of the equation is fees, and that's, I think, where you're really seeing things normalizing, but at pre-pandemic levels, so at a much lower pace. And I think that's where you're seeing a lot of the headcount talk, and that is to some extent the banks saying like, okay, we're gonna start to right size to this new reality. We had 2021 was an amazing year, a lot of records broken for M&A and equities. Last year, I think the banks were hesitant to cut because it was such a scramble, as you recall, in 2021, especially for the junior bankers. And so now we're starting to hear talk of those cuts. We are seeing some green shoots in equity underwriting, definitely a pop this quarter, but the M&A headwind is just really hitting the banks this year.
Herman, for the regional banks, what about the office commercial real estate headwind?
Yeah, so that gets a lot of headlines. For the regional banks that I cover, it is something that is in focus, and we should hear more about how things have deteriorated in the first quarter, but in the second quarter. But what brings us comfort is that the exposures themselves is still fairly low for the largest regional banks in the United States. It's about 2-3% of the total loan book. Underwriting's been historically very conservative. We're talking about a loan to value ratio in the 60% range. So there is a lot of cushion involved before you get any potential losses. We do expect losses down the road, but it should be fairly manageable for the group.
Alison Williams and Herman Chan of Bloomberg Intelligence, thank you as always. Waking up early and giving us that crucial insight. We thank you as always. Now coming up, a look at some of the other market moving events and stocks to watch today and throughout the week. We're already seeing some of the Euro stocks futures gains getting paired here and really having a read through to U.S. futures as well. We're going to dive into it. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Dani Berger in London. Kriti Gupta is in New York. The sell-off in Europe is picking up with some pace. Luxury goods makers are really leading this. Richemont had earnings. Huge disappointment when it came to the American consumer revenue in the region, dropping 2%. The estimate was for a gain. It's that, Kriti, plus the China data dump, which showed fears around any sort of economic momentum. ASML also falling on China news after the close on Friday, news that ASML would face tougher restrictions when it came to China exports.
Yeah, and having a real read through into futures as well. You are seeing S&P futures down about 0.1%. Doesn't sound like a lot, but you are seeing quite a big move. I want to get back to some of the stocks that are moving in the pre-market. For example, Microsoft, Activision. Activision shares are rising. The FTC had lost the appeal, but you are also seeing Activision get that $10 billion or 10-year agreement, I should say, with its counterpart Sony in Asia, that fueling Activision futures. You are also seeing Paramount as well. They are falling on that box office miss, but their parent company in talks with creditors and United also finally reaching an agreement with their pilot. So a lot to digest, a lot of micro moves. I'm sure Surveillance and the other shows will walk you through it. Stick with us. An exclusive interview with Janet Yellen coming up on Surveillance, 8:15 New York time. Stick with us. This is Bloomberg.